This week, retail investors unloaded about 4.0 trillion won from KOSPI. But why didn't KOSPI budge? The secret lies in the movement of institutional investors. This week, investor attention was undoubtedly on semiconductors. However, shipbuilding, defense, and secondary batteries also gained significant attention. While semiconductors maintained strong attention, capital took a breather. Shipbuilding attracted both attention and capital, and secondary batteries are quietly warming up. In the KOSPI, institutional investors showed strong conviction with a net purchase of 3.2 trillion won. Conversely, retail investors focused on profit-taking, net selling 4.0 trillion won. Foreign investors turned the tide by shifting from selling early in the week to buying later on. In the KOSDAQ, retail investors remained active with a net purchase of 0.7 trillion won. The real story of the Korean stock market this week is about policy and global supply chain reorganization. As the government's large-scale industrial support measures materialized, capital flowed into the traditional manufacturing and energy sectors that had been previously left out of attention. Especially, with the expansion of overseas infrastructure investment, export expectations for domestic materials and components companies are rising. The Korean stock market has now begun calculating how these policies will be reflected in earnings. While the AI and semiconductor themes that dominated the Korean stock market over the past few months took a breather, attention is shifting toward undervalued value stocks. As energy security and geopolitical risks come to the fore, stable supply capability has emerged as a new value. Now, the Korean stock market may not just be experiencing a simple sector rotation, but standing at the threshold of a structural change. We organize these trends with data every week. Subscribe now, and you won't miss out on deeper insights.